The Essays of Warren Buffett, Lessons for Corporate America, 5th edition, compiled and edited by Lawrence A. Cunningham, is a collection of Warren Buffett's annual letters to Berkshire Hathaway's shareholders. These letters span over several decades and offer valuable insights into Buffett's philosophy on investing, corporate governance, business management, and the broader principles that guide his decision-making. The book is structured thematically, with each section of the essays focusing on a particular aspect of Buffett's approach to business. Below is a detailed summary of the key lessons and themes covered in the book. Introduction: The Philosophy of Warren Buffett. In the opening chapters, Cunningham provides an overview of Warren Buffett's investment and business philosophy, which revolves around long-term thinking, value investing, and a focus on quality businesses. Buffett's approach is grounded in simplicity, discipline, and a deep understanding of the companies he invests in. His fundamental belief is that investors should invest in businesses they understand, with a strong focus on companies with durable competitive advantages, what he refers to as economic moats. Buffett's principles are guided by a few core values. 1. Integrity and trust. Buffett emphasizes the importance of investing in businesses with ethical management and a strong sense of integrity. He believes in transparent and honest communication with shareholders. 2. Long-term focus. Unlike many short-term investors who focus on quarterly earnings or stock price fluctuations, Buffett advocates for a long-term view, prioritizing businesses that will grow steadily over time. Part 1. Corporate Governance and Management. Buffett spends a significant amount of time discussing the importance of sound corporate governance and effective management in creating long-term value. Some of his key ideas include: 1. The role of managers. Buffett believes that great managers are key to a successful business. He advocates for hiring exceptional leaders who have a strong sense of responsibility and a deep understanding of the business. 2. Decentralized management. At Berkshire Hathaway, Buffett empowers managers of subsidiaries to run their businesses independently, as he believes in giving them autonomy to make decisions. He trusts that these managers are often better positioned to understand their markets and industries than he is. 3. Incentives and compensation. Buffett discusses the importance of aligning management incentives with the long-term interests of shareholders. He prefers incentive structures that reward performance based on long-term results rather than short-term stock price movements. Part 2. Investing Philosophy. Buffett's investment strategy is one of the central themes of the book. His approach to investing can be summarized by several key principles. 1. Value investing. Buffett is a value investor, meaning he looks for stocks that are undervalued relative to their intrinsic worth. He assesses a company's intrinsic value by examining its earnings potential, competitive advantages, and management quality. 2. Economic moats. One of the key concepts in Buffett's investing philosophy is the idea of an economic moat. Companies with strong competitive advantages, whether in the form of brand recognition, cost advantages, or network effects, are better positioned to withstand competition and generate sustainable profits over the long run. 3. The importance of quality businesses. Buffett emphasizes the importance of investing in companies that have strong, predictable earnings and a competitive edge that can endure over time. He is less interested in trying to predict market trends and more focused on finding businesses with a proven track record of performance. For margin of safety, Buffett advocates for purchasing stocks only when they are priced below their intrinsic value, providing a margin of safety that protects the investor from downside risk. This principle allows for flexibility if the company faces temporary setbacks, as the investor has already purchased the stock at a reasonable price. Part 3. The Role of Shareholders and Corporate Responsibility. Buffett's relationship with shareholders is another central theme in the book. He stresses the importance of transparent communication and responsible management of shareholder capital. 1. Transparent communication. Buffett's annual letters to shareholders are well known for their clarity, honesty, and transparency. He believes that shareholders should be informed about both the successes and failures of the business. He is known for taking responsibility when things go wrong and sharing his mistakes openly. 2. Shareholder capital. Buffett treats shareholder capital with great respect and responsibility. He believes that managers should always act in the best interest of shareholders, with a focus on creating long-term value rather than making decisions based on short-term considerations. He believes that shareholders should be trusted to make decisions, and that management should not manipulate stock prices or earnings for the sake of personal gain. Part 4: Financial Management and Accounting. Buffett has long been known for his strong opinions on financial reporting and accounting practices. He argues that financial statements should reflect the true economic reality of a business rather than relying on creative accounting. 1. Accounting and reporting. Buffett advocates for clarity and simplicity in financial reporting. He believes that financial statements should provide shareholders with a clear and accurate picture of a company's financial health. He is critical of overly complex accounting practices that obscure the true state of a business. 2. Capital allocation. Buffett discusses the importance of efficient capital allocation in business. He argues that businesses should only invest in new projects or acquisitions if they can generate returns greater than their cost of capital. He also emphasizes the importance of repurchasing stock when the stock is undervalued as a way of returning capital to shareholders. Part 5: The importance of staying within your circle of competence. Buffett often advises investors and managers to stay within their circle of competence, meaning they should only invest in businesses or areas they understand thoroughly. 1. Know what you don't know. Buffett believes in self-awareness and being honest about what you don't know. He advises against investing in areas that are outside of your understanding, as this increases the risk of making poor decisions. 2. Focus on strengths. By focusing on industries and businesses within their circle of competence, both investors and managers can make more informed and confident decisions. Part 6: Succession Planning and Berkshire Hathaway's Legacy. Buffett spends a considerable amount of time discussing the future of Berkshire Hathaway and the importance of succession planning. He acknowledges the role of his leadership in Berkshire's success but makes it clear that the company should continue to thrive after his departure. 1. The need for a strong succession plan. Buffett has always been transparent about the need for a clear succession plan. He has spent years preparing his company to continue successfully under new leadership, ensuring that the values and culture he's built will be preserved. 2. The role of management and the board. He talks about the importance of hiring the right people to take over and ensuring they align with the company's long-term goals. Conclusion: The enduring wisdom of Warren Buffett. The essays collected in the Essays of Warren Buffett, Lessons for Corporate America provide readers with profound insights into Buffett's philosophy, which blends traditional business wisdom with practical, common-sense principles. From corporate governance to financial management to investing strategy, Buffett's writings serve as a guide for investors, managers, and business owners alike. His emphasis on long-term thinking, ethical management, and value investing continues to resonate, offering a model for success in the world of business and investing. Through these essays, Buffett imparts timeless lessons that will remain relevant for generations to come.